Hey traders, welcome back to the weekly Forex Forecast. Last week was a very slow week because in the lead up to Easter, we saw a lack of volatility in Forex, but also in the stock market, there was really a lack of volatility across the board and opportunities kind of dried up last week. However, coming into this week, you can see that the US dollar is still threatening this major breakout above the 104.98. Now, why is this a major breakout? Because, well, there's two reasons here. One, we have this kind of inverse head and shoulders. This is the right shoulder if I just zoom out a little bit here. And as I've said in previous videos, there's nothing magical about certain patterns. It's just simply the breakout mechanics kicking in above these areas. And what I mean by that is, if you get, for example, people who are short in this area, which of course there are shorts, they tend to put stop losses up here. And those who don't put stop losses or hard stop losses, at the very least, when they see a failure to make a new low, because here's your low, here's your higher low, once price comes back up and takes out the prior high, anybody who was short tends to buy back, at a loss usually, what they've sold. And you also get breakout traders adding additional buys above these areas. And that's why you get momentum, and that's why you get, in this case, what's known as a short covering rally. So you kind of have this pattern where you've got this major head and shoulders, or inverse head and shoulders. Here's your head, here's your right shoulder. And then you also have this kind of mini right shoulder over here. And that's where you get that double break. This is what you tend to see on major breakouts. So although we had a lack of volatility last week, don't be surprised to see this breaking the 104.98 this week and starting to accelerate through this level. And dollar long plays are going to be one of the key themes that I'm going to be looking at heading into next week. And as we go through the watch list in today's video, you'll see that the markets are actually setting up, at least the Forex markets, for inflationary plays heading into next week. Okay, so in terms of market selection heading into next week, there's actually quite a clear regime setting up here. And what we're seeing is we're seeing the Australian dollar at the top of the list. So Aussie longs are going to be my primary play, followed by the US dollar, which significantly, and bear in mind what we just looked at the fact that technically the US dollar looks like it's about to break a right shoulder within a much bigger kind of right shoulder. And what's interesting about that is, as it currently stands, there's no major breakout. However, the data in the HedgeDash app, the quantitative data, is turning green for the first time. In last week's video, this was still slightly red, and now we've turned green. This is the sign that we could very well see that major breakout taking place, because quantitatively, the fuel is there for the dollar to break out with momentum. So I am looking for US dollar longs, and also going into next week, I'm looking at CAD longs. Now, what does it mean when you have the Australian dollar, a commodity currency, the Canadian dollar, a commodity currency, and the US dollar, a safe haven asset, which tends to go up with rates and inflation, all at the top of the performance metrics? It means that we're looking at a kind of inflationary, or in fact stagflationary regime kicking back in. Because what we're seeing here is, the links between the commodities supportive of the commodity currencies like the Aussie and the CAD. But at the same time, when you get that kind of reacceleration inflation, rates go up, to adjust for that inflation, and you see the dollar going up as well as interest rates go up. So we clearly have a stagflationary setup. And what are the main underperformers in terms of Forex in a stagflationary environment? It is the EU majors. So, certainly the Swiss franc, the euro, and the pound you could also look at. But in this case, quantitatively, the New Zealand dollar is actually setting up. Although it's actually a commodity currency, it is setting up this week. And that's the one nuance that I still want to be looking at short New Zealand dollars. So to cut a long story short here, going into next week, I'm going to be looking at the Australian dollar versus the euro, the Australian dollar versus the Swiss franc, and the Australian dollar versus the New Zealand. So Aussie New Zealand to the upside, Aussie franc to the upside, and also Euro Aussie to the downside. I'm also going to be looking at the dollar pairs, New Zealand dollar to the downside, US dollar Swiss franc to the upside, and Euro US dollar to the downside. And of course, Euro US dollar to the downside is essentially just the inverse of that major DXY breakout we discussed, because the euro is 57% of the dollar index. And you can also look, but we're not going to be looking in today's video, you can also look at the pound versus, because it is in the positive side of the scorecards, but it does have a negative trend arrow here. So it's kind of moving in this direction. It's kind of getting weaker in terms of its performance metrics. And the yen is doing the opposite, and that's something else I want to talk to you guys about. So I primarily like the New Zealand, the Swiss franc, and the euro for shorts versus the Aussie, the US dollar, and the CAD. So New Zealand CAD to the downside, CAD franc to the upside we'll look at, and also EurCad to the downside. If you want to add in, you can look at pound Aussie to the downside, pound dollar to the downside, pound CAD to the downside, and maybe we'll look at pound dollar to the downside, we'll see. Then obviously that's something that could be looked at as well next week. But the yen is something I would once again avoid. Now last week, I did notice that the Japanese yen, was a weak currency, but it was so weak that we were getting the BOJ, the Ministry of Finance out of Japan, coming out talking about intervention, kind of jawboning it higher. And there is a significant risk of intervention still. So in terms of the Japanese yen, I would not want to be short this again this week. I'm going to be avoiding Japanese yen shorts because of the risk of intervention. And at the same time, we're also seeing it bottom or trough quantitatively in the data, and very much like when you get something going from a red performance wheel to a green one, it's a sign, like the US dollar, of a major breakout to the upside coming because it's gone from negative overall performance to positive. It's also a sign when you get, say, the Japanese yen, which is negative, 100, and then it bottoms. That is also a sign very often of a reversal. And we saw that, in fact, previously with the yen in previous videos as well. So going into next week, again, I prefer Aussie, US dollar, CAD to the upside versus the New Zealand, the Swiss franc, and the euro. I'm going to be avoiding yen shorts once again because of the risk of intervention. But also, if you wanted to pair pound Aussie, pound dollar, pound CAD to the downside next week, that would be viable in this kind of stagflationary setup that we're looking at here. Okay, so let's go through the watch list starting with crude oil, and we look at crude oil every single week, but crude oil is actually structured as a good long opportunity or to look for buying opportunities heading into next week. And you can see the upper bound at the 86.07, the lower bound at the 80.80, and again, for anybody new, these are levels for the week. This is a range where the market is pricing a 70% chance of staying between this range next week. So if we breach the upper bound, essentially have a 30% chance of continuing higher, which makes it a good profit-taking opportunity for any longs. And if we breach the lower bound, you have a 30% chance or 3 out of 10 chance of continuing lower. And therefore, it makes it a good opportunity to actually buy the dip for anybody looking to be long, for a reversion back into the range next week. And that's the same with all the assets. So with that said, any continued pullback in this market, because I can either be long crude oil or do nothing next week, especially as we're starting to see a stagflation regime kicking in, I cannot short this market. So any pullback, I'm going to be looking at one of two things. Either you can buy a market on a breakout, you get the breakout intraweek, a pullback, and then you get a rally into the upper bound at the 86.07. Or the second way I'd be looking at potentially buying this next week is if we breach the 80.80 and we start to become essentially oversold within the week. And I like the fact that we've got prior lows down here as well, because once we breach this level and we become oversold, if we start to take out price support, that's where you can start to really see these markets reversing for 1 or 2 days to the upside. So either looking for the intra-week breakout, a pullback, and then the follow through, and very often you only get one opportunity during the week, for a breakout, a pullback, and then a follow through. Or looking for a breach of the 80.80 for this market to become oversold, and then looking for a 1 or 2 day reversion back into the range next week. So the first Forex pair we're going to look at is Aussie New Zealand. Now, Aussie New Zealand is trending to the upside, and again, the Australian dollar is a commodity currency being supported by a higher gold price. Just as the Canadian dollar is being supported by a higher crude oil price, the Australian dollar is being supported by a higher gold price. So any pullback in this market, I can either be a buyer or do nothing next week. I cannot short this market. You can see we're lacking momentum, so I wouldn't be surprised to see this actually pull back at the start of the week. Any breakout before we reach the 1.08401, this would be viewed as an opportunity to look for follow through into the upper bound at the 1.09710. And if we breach the 1.08401, especially as we have a nice 4-hour low over here, if we breach this and we become oversold on the week, this is where you can look for a 1 or 2 day reversal to the upside in Australia and New Zealand next week. Next is Aussie franc. Again, we've got a commodity currency supported by the gold price versus a European major where we just had unexpected rate cut as well. So I'm really only looking to be a buyer of this market or do nothing next week. What I'd like to see is any pullback. If we start to pull back, and you can see this sets up this kind of channel for those of you who like your trend lines. Any breakout next week to the upside would be viewed as the opportunity to look for a pullback. So I'm not looking necessarily to capture this intra-week before the breakout. Wait for the breakout. Kind of points you in the direction of travel. Look for the pullback, and then that's the opportunity for the follow through into the 0.59235. And you get an upper bound and a prior high. You can very often target the prior high, you push through, test the high, and then that could be pretty much it for the week. But if we continue down and we just hold this trend, and we test the 0.58245, I like this as well because we're stair stepping. See, here's a high, we break it, and we pull back and we test it. And we have this stair step. That's the opportunity to get involved. Then we break out, we pull back, and we retest the prior high. We stair step it. So this would be a good place if we breach the 0.5824. We become oversold on the week, and we test the prior high where we had this big breakout. That's the opportunity for 1 or 2 day reversal back inside the range next week. So again, I can either buy this or do nothing. I cannot sell this market next week. And the final Aussie pair is EurAusd. We are kind of struggling here. We're kind of chopping. And we do have previously the momentum was to the downside. So I like this. There's a sell-off. We have this kind of correction. So I'm only looking to be short this market. Any pullback next week is viewed as the opportunity to look for a breakout to the downside intra-week. And any breakout, pullback, and then follow through into the 1.6411. That would be the opportunity to look for any intra-week profit taking below this level, because there we become oversold on the week in a market that we're looking to be short. But if we continue to hold this trend and we pull all the way back, we breach the 1.6653, especially if we breach this, test this high, that would be a great place to look for a 1 or 2 day reversal to the downside in EurAusd. Moving on to the dollar pair, starting with New Zealand dollar, we did have this nice breakdown below the low, and we're starting to break through here with momentum pullback, retested and sold off. So I can either be short this or do nothing. Buying this is not an option for me next week. What I'd like to see is I'd like to see this market pull back towards 0.60490. And you can look for that intra-week breakout to the downside, looking for the pullback, and then a follow through into the 0.59156. So that's your breakout trading to the short side. Or if you want to buy on the rip or buy on the pullback, any continued pullback above the 0.6049, we start to breach this. Anywhere above here would be a good opportunity to start to look for a lack of momentum, maybe on the 1 hour or the lower time frames, and then looking for that 1 or 2 day reversal back inside the range next week. Next is US dollar Swiss franc. I can either buy this or do nothing. Selling this is not an option. And here's where we had that unexpected rate cut from the Swiss National Bank. And of course, with the dollar turning positive in the performance metrics for the first time last week, this does suggest further upside and does suggest fuel for that major breakout, technically, which we looked at the beginning of the video. So any continued pullback in this market, what I want to see is, first and foremost, as a breakout, you can look for that breakout intra-week, pull back, and then rally into and above the 0.90932, and that's where I'd be looking above here at booking any intra-week long positions. And if we continue to pull back and we hold the trend and we pull all the way back, especially if we breach the 0.89458 and test this high, there's a nice kind of the breakout on the unexpected S&B rate cut. We pull back, retest the prior high, and we're oversold on the week. That's where I'd be looking this area for a 1 or 2 day reversal to the upside back inside the range in US dollar Swiss franc. Next is euro dollar. Now, the one thing to note about the US dollar pairs, if you are looking to trade these intra-week, as I'm going to be looking at next week, we do have non-farm payrolls on Friday. So ideally, I'd like to be in and out of the dollar trades before Friday. So avoiding that risk event, because if you're short-term trading, when you have risk event or you have catalysts, you can be on the wrong side of bigger losers. And that's what we're generally trying to avoid. We can't always avoid it, unfortunately, but that is the job of a short-term trader, is to avoid those bigger losses where we can. So going into next week, bear in mind non-farm payrolls on Friday, but any pullback in this market is viewed, especially when we looked at the bigger picture outlook for the dollar at the beginning of the video. I only want to be short or doing nothing in this market. Any pullback is viewed as the opportunity to look for a potential breakout in the direction of the overall plan that we're looking at here to the downside, down to the 1.07108. Now, that is the kind of short-term intra-week trade, but bear in mind, this is a major low. If we break this low, you might actually see this breaking with momentum next week, so just bear that in mind. But any continued pullback before that, if we fail to break out intra-week and we breach the 1.0875, this is where we start to have roughly a 70% chance of reversing. Actually, when you add in all of the market selection, everything else, it's actually much higher. But generally speaking, you're looking at, a 3 out of 10 chance of continuing higher. So this is where I'd be looking for a potential short opportunity for 1 or 2 days back inside the range next week in euro dollar. And the final dollar pair we're going to look at is pound dollar. Now, I do prefer the other markets that we just looked at, but I'm putting this in this week because I know many of you asked for it and many of you like to trade it. So this is for you guys who like to trade the pound dollar setups. Coming into this week, I only want to be short or do nothing in this market. I do not want to be buying this. I did discuss in last week's video the bearish catalyst from the Bank of England rate decision, where the two hawks voting for further hikes actually threw in the towel and voted to hold. And this was a dovish meeting. And we did see the pound selling off because of that. Now, look at this as well technically. You've got the momentum and you're kind of consolidating. So because not much happened last week, a number of those kind of bearish catalysts roll over into this week. So any pullback in this market is viewed as an opportunity only to look for short positions and breakouts intra-week. And I'm going to be looking down to the 1.2530. Would not be surprised to see it breach this and test the low over here. That would be an opportunity for short-term trades to look for potential profit-taking opportunity. If we break this, we could also come down with momentum. Why? Because we've just discussed that's going to be a major breakout in the dollar potentially because we've got that higher low. So I would not be surprised to see this actually break this low with momentum. But just for a short-term trade, you book your profits and then you come back. Next week it pulls back and you short it again. Aside from that, if we fail to break out intra-week, if we're just correcting, consolidating, and we breach the 1.2718, this is an area I would be looking for a 1 or 2 day reversal back inside the range next week. Okay, so wrapping up the Forex markets with the Canadian dollar pairs before we move on to gold and silver. And look at this setup here, because this is exactly what I was talking about earlier on in the video. Notice how we have a high, we fail to make a new high, and then all of the buyers, they're buying the dip, they exit their longs, okay, and they short. If you've got a long position, you've got a stop loss, that's a short. And once we break here, we have a really nice sell-off to the downside. So remember this setup, because this is exactly what I was talking about in terms of the dollar index breaking higher. And then, of course, we also have a secondary, a bigger version of that up here. It's exactly this kind of sell-off that I think we're probably going to see in the dollar to the upside. So going into next week, in terms of short-term trading, really nice momentum breakout. Here's your kind of small consolidation. Then we break with momentum. We've got this kind of bear flag. So any pullback, I would be looking potentially for that inch-week breakout of the bear flag down to the 0.8030. And if we continue to pull back and we trade into the upper bound at the 0.81576, especially if we pop through here with a bit of volatility and test these highs, that's going to be a great place to look for a 1 or 2 day reversal to the downside in New Zealand CAD next week. Next is CAD franc. Now, with the crude oil price supporting the Canadian dollar to the upside and that unexpected rate cut actually putting downward pressure on the Swiss franc, as we saw over here, so CAD franc blasting to the upside on that unexpected S&B rate cut. This really, makes me want to be bullish or doing nothing in this market next week. I don't really see a reason to sell this market. So any pullback is viewed, and we're trending to the upside as well. Any pullback is viewed as an opportunity to get involved with this uptrend where we break out intra-week, pull back, and you get that kind of follow-through setup. And you're not going to be able to trade every market we're looking at. That's not the goal. The goal is to have a number of markets on the watch list so that we can reactively get involved in the ones that set up. But this is an asset that I'm looking at trading to the upside. And if we continue to come down and we breach the 0.66118, that means we're oversold on the week. If we break this low, this is going to be a good place to start to look for a 1 or 2 day reversal back inside this range next week. And the final Forex pair before we move on to gold and silver is EurOCAD. EurOCAD is a market I can either short or do nothing. Now, I don't like to add levels onto my charts because you don't need a line on the chart. It just makes it look messy. To know that this is the prior low that was broken, we sold off with momentum. Why? Because all the buyers had stop losses here, and this is the momentum you want to see on a breakout. This is pointing you in the direction, very much like this. We break out here. There's your momentum. We consolidate. Okay, and what's it telling you? What happens next? We see a continuation of this momentum. So just like over here, but to the downside, now these stop losses have been taken out. We've seen this momentum. Any pullback here, buyers are going to be hesitant to step in, and you're going to see people stepping in fact, short, in the direction of the momentum. So any continued pullback, we have this really nice bear flag pattern setting up after this momentum sell-off. And of course, any breakout and a pullback, that is the opportunity for a follow through into the 1.45147. And if we just continue to pull back and we breach the 1.4693, we actually become overbought on the week, and that sets up a reversion for 1 or 2 days back into the range in this market next week. Okay, so wrapping up the video with gold and silver, starting with gold. Now, the issue is going into next week, I have a bullish bias on the dollar. When the dollar is strong, this caps gold. And when the dollar is weak, this actually lifts gold, it's supportive. But we're in a situation where we're seeing both the dollar and gold rising together. And I do not want to be short gold heading into next week. So what I want to do is I want to use both gold and silver reactively to take trades with the dollar. So I'm going to be looking at bullish setups in gold. And I'm going to be looking at bearish setups in silver and taking the ones which set up the best next week, rather than trying to take an outright position long or short in either gold and silver. It gives us additional options so as we can trade to the upside or to the downside next week, regardless of what happens. So in terms of gold, I don't want to short this because this is the better long play out of the two between gold and silver. Any pullback in this market is viewed as another opportunity to look for a breakout and then a move into the 2280.91. And if we continue to pull back and we breach the 2185.28, this is the area I would be looking for a potential reversion next week back inside the range for 1 or 2 days up in gold next week. Again, despite the bullish bias in the dollar, I do not want to be short this market. I would have preferred longs, and I have preferred longs when we've seen the dollar in the negative side of the scorecard. So just keep that in mind. When the dollar was negative, this really did help gold to the upside. Now the dollar is in the positive side of the performance metric. Don't be surprised to see upside in gold actually struggle a bit more than it has done previously with a weaker dollar. Wrapping up the video with silver. Now, I look at silver every single week. You know, euro, dollar, oil, gold, silver. We look at these every single week. And the setup that I'm looking at here potentially is short silver from the upper bound of the 25.74. But let me stress this. I'm not a huge fan of shorting silver next week. I think there are better markets, certainly in the Forex complex that we've looked at. I would much rather be involved in those. I'm really only looking at this as a plan B. And to be honest with you, silver is a market you could probably buy this from the lower bound as well. It's a market where you could probably buy from the lower bound or sell from the upper bound. But because I'm going to be looking at buying gold, I mean, if gold and silver both trade into their lower bounds, I would rather buy gold. And if gold and silver both trade into their upper bounds, I'd rather short silver. So on that basis, as a kind of plan B, if we can trade into the 25.74 and test this high, this would be an area, especially if we trade into this high, and what we start to see is as we trade into the high and we breach the 25.74, if what we start to see next week is the dollar breaking out with momentum, that's going to be the opportunity to look for a potential short for 1 or 2 days in silver to the downside. I don't think I'd like to short this intra-week, so really silver is a short from the upper bound for me, and I really want to be timing this. If we trade through the upper bound, I really want to be timing any reversal with a potential breakout in the dollar. Again, if you want to, if you test the lower bound here and you test this low, you could also potentially look at this to the upside for 1 or 2 days. You can really trade this from the upper or lower bound. But again, I prefer gold longs next week instead of silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video. And if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com.